The other day, it looked like Bitcoin was going to reverse back up until forces of supply dominated and dropped the price back down to the 200-week simple moving average.
The bearish attack on our brave Bulls army was a major setback.
Chill out, bro. We just need to understand where we're at in the four phases of the market.
And then we can plan a counterattack.
I'm going to do a multi-time frame analysis and take a look at the weekly, daily, and 4-hour chart to get a sense of direction in the short term. Clearly, on the weekly time frame, we are in an uptrend. By just looking at the Heikin-Ashi candles, you can see that the floors have been rising and the ceilings have been rising. Until this floor drops below this floor, we are still in an uptrend. Now, let's take a look at on-balance volume. I like how the on-balance volume is still above this bullish breakout zone, this zone of previous resistance, now flipped to support. But it is unfortunate how the on-balance volume has dropped below its 21-week simple moving average. And there is a loss of this uptrend. Now, taking a look at the MACD indicator, we can see that the moving averages and histograms are starting to turn over. If the weekly candle starts to fall below the 200-week simple moving average, then the moving averages may create a bearish cross and the histogram may flip negative and trigger a sell signal. The ideal scenario is the weekly MACD is only showing weakening momentum and maybe Bitcoin may just consolidate sideways for a while before reversing back up. The bullish scenario is that the weekly MACD is just showing us slowing momentum and bearish forces are starting to hesitate at the 200-week simple moving average. And finally, the Vortex indicator, which represents volatility, is clearly showing that negative volatility is increasing and did a bearish cross over the positive volatility. This is a sell signal. Although my favorite indicators, the volume, momentum, and volatility, are showing us warning signs about the price action, as long as the price is above the 200-week simple moving average, I have to remain bullish. And it is creating higher ceilings and higher floors over time. So we're technically still in an uptrend, and I have to give the weekly chart the green marker. Now, shifting to the daily chart, we can see that there is this head and shoulders reversal pattern that formed, and Bitcoin was ranging sideways for over 10 days, and finally it shot down past the $27,000 psychological level, and it does look like it is gravitating towards the 200-day exponential moving average. Originally, I was looking at this in 60-day cycles, but as you can see, usually after the 60-day mark, the price would shoot up, 60 days right here, and the price would shoot up, but this was a complete failure and it did not even do any kind of counter trend bounce. So I'm thinking we have to adjust the cycles to potentially shorter bearish cycles, which are, in my opinion, potentially 45 to 50-day cycles. And it does look like there's a lot more room to fall. I do think that we should probably hit the 200-day simple moving average pretty soon, maybe in the next few days, but that still gives us a plenty of time to go down a lot farther. How much time do we have here? Okay, nearly 2 weeks. So we can potentially see it bounce off the 200-day simple moving average and then do a counter trend bounce and maybe even drop even lower to the $21,000 level, which would be previous resistance to hopefully flip into current support. The on-balance volume doesn't look good. It's below its last point of support. And we can see it's below its 21-day simple moving average. Until on-balance volume can pop above this last point of support, this level right here may be its new resistance. The MACD was looking promising with a bullish divergence on the histogram, but as you can see in the last few days, the histogram is expanding negative again. So a daily buy signal has not yet been triggered. The Vortex indicator is confirming the price action has negative volatility. We can see that the positive volatility is starting to drift away and the negative volatility is starting to expand up. So this negative sell signal, which happened somewhere around here on May 8th, is still in play. Well, all my favorite indicators are negative, so that sucks. And you can tell just by price action alone. Let me flip to the Heikin-Ashi chart. You can see that the ceilings have been falling lower and the floors have been falling lower as well. So this is clearly a downtrend. So I have to give this chart, even though it's above the 200-day exponential moving average, right now this chart is negative. So I'm going to give it a red marker. Now switching over to the 4-hour chart, we can see that price was trapped in an equilibrium for over a week and it finally lost support. And we're on its way to a decline, unfortunately. The on-balance volume is clearly below previous points of support, and it's below its 21-unit moving average. What's also interesting is that the on-balance volume was inside a pennant that broke bearish. The MACD is bearish. Aggressive bulls are looking at these moving averages and potentially eyeing a reversal, since the most aggressive bullish entries are when the moving averages are below the histogram and they produce a bullish cross. As you can see with this bullish cross right here that had confluence with the histogram flipping positive, which triggered a buy signal at the bottom of this trading range. And finally, the volatility is negative. The negative volatility is stronger. The bearish cross, which produced a sell signal right at the bottom of this trading range, is still in play. So the volume, momentum, and volatility are all negative, and the price is also negative as well. We can tell by the Heikin-Ashi candles that the ceilings have been falling lower and the floors have been falling lower as well. So this is clearly in a downtrend. All indicators and price action looks bearish. So the 4-hour chart is going to be marked red. To quickly recap, the weekly chart is positive because it's still above its 200-week simple moving average and the floors have been rising, but the daily and 4-hour charts are both negative because they have broken below technical patterns that represent the battle between supply and demand. Based on the triple screen trading system, you can see my cheat sheet right here, which shows that the weekly chart, which is also known as the tide, was positive, and the daily chart, known as the wave, was negative, and the 4-hour chart, which was the ripple, was also negative. And that would be your entry point to this system. So it says that you should be long because of the weekly chart is overall bullish. But the problem is we're seeing all this negative activity in the lower time frames, the daily and the 4-hour chart. So you might want to trail your stop loss. You should have technically been out of your position once it dropped below this equilibrium. And based on the daily chart where I showed you the 45-day cycles, it may be another week or two before we really look for that long signal.
So, which market phase do you think we are at, DJ James?
It looks like we're declining. What do you think, Dave the Brave?
You may be right. We need to find a good price level to form a reversal pattern to absorb supply and take out the bad bears.
Here's that visual again on the daily chart where I think we may be in 45-day cycles. So feel free to subscribe to this channel and I will do an update once we hit the 200-day simple moving average. If we get there, maybe it'll reverse up here and validate this right shoulder, but I kind of highly doubt it. Once we get closer to the 45-day mark, which is around the start of June, I will be definitely looking for a trend reversal pattern. And in the meantime, I do a lot of YouTube shorts, these 60-second technical analysis videos almost every day. So if you're subscribed, you would have seen my last video where I talked about the bearish divergence on the 4-hour time frame, which resulted in it dropping down out of its equilibrium. It does look like Bitcoin may be rejecting again. As price has been ranging sideways, the on-balance volume has created a bearish divergence. So the effort used to retest this key level is now showing weakness.